a profit of $4,017. That's the trading result from our commodity and futures trading according to COT data for week 49. Welcome to Insider Week. In this video, I will review the trades of last week and the corresponding results. Before we get started, I'd like to mention that for those of you considering becoming an Insider Week member, you can follow our open positions for all of our trading strategies on our website's homepage. We proudly publish our open positions each market day because we believe that only full transparency will create the trust and confidence necessary for you to become a successful trader. And for those of you that would like to know our trading plans in advance, you can sign up for a silver subscription that will grant you access to our members-only portal, where we reveal our trading signals and discuss our trading plans for each upcoming week for the 40 future markets that we trade. I'd also like to bring to your attention that the founder of Insider Week and award-winning professional futures trader Max Schultz will be conducting a free webinar to discuss some interesting trading opportunities in the coming weeks, and will also be available to answer any questions that you may have. If you're interested in learning how to trade futures successfully in your spare time, I encourage you to join us Tuesday, December 13th at 12:30 p.m. New York time. You will find a link to register for the webinar under this video. Now let's get back to the trades of last week. First, in our COT1 strategy, we went into the week with an empty portfolio, and by the end of the week we had long positions in gold, feeder cattle, and soybeans. When we compared the CRB index, which is the commodity price index, with the seasonal trend, we can see that commodity prices continued to move in a sideways range. We can see that the index has reached its long-standing seasonal low, so we expect commodity prices to begin to rise again in the coming weeks. So for last week, we began to look for more long positions than short positions, according to our three trading strategies. Now let's have a look at our COT1 strategy for last week. Here are the markets we identified for possible trades and the direction we expected each market to move. As you can see, we have more markets we believe will rally than decline. Let's have a look at the trades for the COT1 strategy. The first market is gold. On the weekly chart, we received a few buy signals at a strong support level, coupled with a strong seasonal trend. We began looking for the right timing to enter this market on the long side based on our strategy rules. On the daily chart for gold, we identified an entry pattern and took a long position in the small micro gold futures, which track the price of the larger gold contract but is much more affordable for small traders. We will watch this position carefully next week as the U.S. Federal Reserve will meet to make a decision on U.S. interest rates, and we expect that will impact the price of gold. The next market is feeder cattle. From the weekly chart, you can see there is a steady uptrend in this market, and last week we received a buy signal in the direction of this trend. Seasonally, this market should already be trending downward, but the marketplace is ignoring seasonality, so we looked for an entry into this market on the long side according to our strategy rules. On the daily chart for feeder cattle, you can see that we entered a long position in this market according to our timing rules, and we wait patiently for our profit target to be reached. The next market is soybeans. From the weekly chart, you can see there is a range market, but with higher lows. We believe that there is pressure in this market and anticipate a breakout of this range with higher prices in line with seasonality. On the daily chart for soybeans, you can see we opened a long position last week according to our strategy rules, and we wait patiently for our profit target to be reached. So although we have open positions in gold, feeder cattle, and soybeans, we did not close any positions last week, so our COT1 portfolio remains unchanged for week 49. Next, let's have a look at our COT2 strategy, the so-called champion strategy. This strategy is more aggressive and recommended only for advanced traders. As you can see, we started into last week with an empty portfolio, and we ended the week also with an empty portfolio. Here is the performance for the COT2 strategy. We had a profitable trade in feeder cattle and a smaller loss in sugar. This resulted in a profit of $3,538 for week 49. Our last trading strategy is the weather trading strategy. In this strategy, we combine COT data with fundamental extreme weather analysis to identify strong trends in the commodity markets. We began the week with 3 long positions and ended the week with 2 long positions. We sold the NIB ETN, which tracks the cocoa futures market, for a small profit of $479. We also scaled up our long position in the BOIL ETF, as we expect colder weather to put pressure on natural gas prices. So for our weather trading strategy performance, we realized a profit of $479 for week 49. That's it from our side this week. From all of us here at Insider Week, we wish you and your family happy holidays. Of course, we'd love to hear from you, so please share your thoughts in the comments below, give this video a like, and be sure to click subscribe to get notified when we post our next market review. If you are new to futures trading, check out our free basic course at insider-week.com. We hope this video helps you prepare for the upcoming trading week. And as always, be aware of risk, because risk and money management is the key to success in trading.